Hi, everyone, and welcome to the Strategic Wealth Strategies Podcast. I'm excited to welcome to the program Alan Porter. Alan, what's going on, man? How are you?
Hey, it's a beautiful day out here in North Carolina. How you doing?
I'm doing fantastic. And today we're going to talk, I have a bunch of questions to ask. The first question is, what do these rate hikes mean to the American consumer? These interest rates just keep going up and up.
Well, I'll tell you, it just keeps going up and up. But the reason they're raising the interest rates is to tame inflation. And they said, well, I just heard it last night. Inflation is the lowest it's been since this spring or this last summer or whatever. I said, it's still higher than it's been in, I don't know, 40 years, whatever. But the thing is, a 1/4% interest hike for consumers means that's at $1.7 billion more in debt that the Americans are going to have to pay. So they're cutting back on spending. Job openings have decreased. Because one of the things, just like all the bank failures. Now this doesn't cause the banks to fail. The banks are over leveraged, but it has something to do with it because they're not able to loan the money out that they were before. So that's one of the reasons the job openings have decreased, because they're not getting money out to the business owners.
No, they definitely are not. And by not doing that, you don't have the money to get out there, cash flow. You can't hire people.
Absolutely not.
All right, so let's continue. So the next question, what about the recent bank failures, Alan?
Well, the recent bank failures, this has nothing to do with it. The banks are over leveraged. They have 3 major banks that have failed, but there's 84 banks that are on the line that people are watching very, very closely. And if you got more than $250,000 in these banks, you got a problem, because they're not insured by the FDIC. Besides that, the FDIC does not have enough money to cover these banks if they did fail.
They definitely don't. They don't have the money. If they don't have the money, then they're not going to be able to fund it, right? That's the key
single
part.
account for a single person.
And I think when you look at it, the banks, it makes the consumer very concerned about their money. Would you be, if you had a certain amount, I'm sure you're smart enough not to have a ton of money in the bank in other things, right?
Correct. Absolutely.
Are we going to,
mean,
yeah, go ahead. Go ahead, Alan.
Well, it affects everything, but understand this, the average interest rate on a credit card right now is 20%.
And that's where you talk about the effective, we talked about in other podcasts.
Yeah, the effective interest cost of that is more like 80 to 90%, because I just did a client today. 98% effective interest cost on 4 of their 6 bills. And when I told her that, she could not believe it. I said, just take that, divide it by that, and that's what your effective interest cost is. And that's because of these interest from that.
All right. My next question for you, are we going to be able to avoid a recession?
Well, that's kind of a joke. We were in a recession last year because the definition of recession was 2 decreases in the national gross product 2 quarters in a row. We already had that, but now they want to redefine it because of the present administration. So yeah, I think we're going to get in a recession. And I think the market, and I've been saying this for a long time, the market's down 20% this year, but I think it could be a 2008 or worse.
Oh, that's not good. That's not good at all. What can people do to protect themselves, Alan?
Well, they've got to make a plan, for one thing. And they've got to educate themselves on effective interest costs. They've got to get rid of their debt. They need to become educated. The things that they can do, have a diversified plan. But if you don't have a plan, get one. And if you got one, improve on it, because things change daily. The laws change daily. The interest rates are changing daily. But you've got to have a plan to protect yourself, diversified assets. Contact a certified financial fiduciary for his guidance, because he'll know what he's talking about. And the other things too is you need to learn to protect your family, because if you got all your money just sitting in a like a CD or anything, you're not getting a return on it. The banks are making a hell of a lot of money because they go out and loan that money out at 5, 10, 15, 20%. But if you have insurance products such as fixed indexed annuities, cash value life insurance, that money compounds for you in a tax-free account. And they're not tied to the banks. Okay. They're tied to the insurance companies have been around for over 150 years and paying dividends at that time, even during the depression. They still pay dividends, and they're the only ones that survived the Great Depression. But people need to become educated. They need to think outside the box now.
And it's interesting you said that about getting paid and not worrying about things. What about scams, Alan? There's a lot of scams going out right now.
Oh my God. I think Americans lose something like $3 billion to scams every year. But there's a bill in Congress right now. It's called the Financial Exploitation Prevention Act. Hopefully that will help. But there's many types of scams. There's elder abuse scams, because when people are elderly, sometimes they're attacked by dementia or Parkinson's. Not Parkinson's, but Alzheimer's. They think they're making the right decision, but they don't know. Another thing that's really sad is if you got a person in long-term care, a loved one in long-term care, you need to monitor that caregiver. I've got a friend personally that their caregiver stole a tremendous amount of money from the client's mother. They're out there to do a service, and yeah, they're doing a service, but they get tempted with that excess money laying around there. And that lady had thousands of dollars in cash in a box in her bedroom. But that's just some of the things. Block solicitations on your phone and emails. The IRS and Social Security will never ask for personal information on the phone. So if you get somebody, and especially this big one, and I got caught in a scam one time because I had my computer on and I got Windows, and I had problems with Windows. They come on the same type of web address and everything. Well, what they were doing was holding me hostage. And so I said, just hold on. And they said, whatever you do, don't disconnect the internet. Now I disconnected the internet and I went to the bank. And I got the bank president. I said, okay, now we're back on. I want you to know that you've been, the FBI's been notified, and this is the bank president right here. And immediately hung up. And I got my computer back, but he was holding everything ransom.
Scary, these things. You have to be very aware and look out for these situations.
Absolutely. I mean, you safeguard, change your passwords. Contact a person that can check for fraud also. A certified financial fiduciary, someone like myself, can bring this, because we go through anti-money laundering education to where we see red flags. And but here's a big problem, Neil. The elderly, they don't want to be embarrassed. They got caught in a scam and lost a lot of money. Only 1 in 44 cases are ever reported. And think about that. 1 in 44 cases are ever reported, and they've lost $3 billion.
How do you think we could stop this, Alan, from happening?
Well, like I said, safeguard your accounts, block solicitors, report the scam, get everything you can, like an email, a phone number, everything. And if you feel suspicious about anything, this is the number one thing. If you feel suspicious about anything, freeze your accounts.
Freeze them fast, right? Oh,
Yeah.
Because if you don't, it's too late. And so look out for those certain situations. And there's people out there, you're saying, that have the money, right, Alan, in their house instead in a bank. Instead, bank, invest in it, right? They're missing out on so much money right now, right?
Exactly right.
Not trusting the market, contact Alan today. Alan will figure it out for you. And the best place to go is just call you at 910-551-1046. Leave a message, text you, right? Because you're busy as can be with talking to so many people that want to become debt free, right? And have cash and have have income tax free for life. That's the goal, right? And be debt free. And Strategic Wealth, the number
exactly. 551-1047.
Okay.
Or you can email me at strategicwealth, the number 0 @gmail.com.
All right, Alan, we appreciate it. Thanks again.
Okay, we'll see you later.
All right, that was the Strategic Wealth Strategies podcast, guys. Take care.